Welcome to the Investing Podcast, presented by Tusk Media. Now, for your early morning look at financial news and activity in audio and video form, here's the Morning Market Mimosa.
Hey everybody, welcome back to the grind, the literal grind. You can probably hear it next door, lots of construction underway. This is the Investing Podcast. It's Monday, September 26, 2016. This is the Morning Market Mimosa. It is Season 3. We tried out the long marathon format on Friday. We're going to do another marathon podcast on Wednesday. But until then, I'm Andrew Hall, Ben Nye for the morning. How's it going, man?
It's going well. Good weekend with the picks.
Yeah, man, you are killing it. Ben is like 16-4 or something like that over the last 2 weeks.
I've been.
It's unbelievable.
A lot of it's come at the last moment too.
It's infuriating. Absolutely infuriating. He's crushing it. So we'll talk football here in a second. Futures down kind of across the board. A number of big storylines I feel like weighing on things. I saw something this morning saying that the debate was weighing on markets this morning, which I find completely ridiculous.
We didn't really know this debate was coming until 3 years ago or
Surprise, something? There's a presidential debate tonight. S&P futures down 42 bips. Dow futures down right at 0.5%, 48 bips actually. NASDAQ down 53. Oil up about 1.4%. We're going to actually start with oil. We talked a little bit about OPEC convening and how we wanted to be invited to those conferences and start getting more involved. We want to be there for those steak dinners. Yeah. They're actually probably eating something way nicer than steak that we don't even know about.
Yeah.
But we want to be there. The thing that really caught my eye today was the Algerian energy minister said that, quote, all options are possible. So everything's still out on the table, and it just really struck a nerve because I feel like we've been hearing that from Janet Yellen and various Fed bank presidents for how many years now? It was like the same thing. I felt like I was reading a Fed release.
Right. Yeah. It's an all of the above strategy in terms of the OPEC strategy.
Yeah, we could cut production, we could freeze production, we could maybe not cut it, we could ramp it up. You never know. All options are possible.
25% probability is the probability JP Morgan is giving it to a deal, and I would take the under on that.
Yeah, it's not happening. But anything could happen.
And oil rising today.
Yeah, oil up about 1.4%, up above $45. We've talked about this a lot, but just so choppy. Yeah. Oil pricing, if you look at it in a vacuum. I mean, when was the last time we had a day in which we said oil moved less than 0.5% or something like that? I mean, it seems like every day it's like 1, 2, 3, 4%. Yeah. Crazy moves in that. But still, I guess kind of finding some stability between like 43 and $47, which is a pretty big range. But
I'm just glad they've got the gas pipeline up and running from the southeast here now. I'm starting to see those gas prices.
Did you have any issues with it?
No.
Just pure Facebook mom panic.
But I don't have to worry about seeing that on the news 24/7 anymore.
Exactly. Now we can focus on more important things like the debate that's coming up tonight. Apple. Some news last week that we never really got to. Talk to us a little bit.
Yeah, German outfit GfK is just watches a lot of Apple's iPhone sales and says that the iPhone 7 is down 25% in terms of sales versus the iPhone 6 at the same point. So it's a thinly sourced story, and you know, if you actually back it out, the story came out at 8:30 p.m. German time on Friday.
Sneaking it in.
So, you know, I don't know if it's just kind of a rumor or if it has some teeth to it, but Apple actually sold off on the news. And we'll see what happens today on it.
Yeah, and we've kind of continued to struggle with this. I feel like when iPhone 7 came out, you and I were up here, we're talking about it. We weren't blown away by the features. We also weren't blown away by the expectations. We felt maybe they were a little bit high, but they weren't that aggressive in terms of what people were expecting for sales. Then we get news from some of the smaller carriers saying, whoa, we're getting unbelievable growth in this, but also you had growth for the carriers themselves, which we were trying not to read too much into, but the market really took off and ran with them. Now you have something basically kind of reporting to the contrary, so it's a mystery.
Yeah.
Maybe this is all just, Apple's plan to stay in the headlines.
Yeah.
They're doing a great job of this, throwing us off their scent, nonstop. Verizon and Twitter, we've talked a lot about Twitter and deal or no deal. Feels like that's kind of the theme. A lot of speculation Friday. The stock was up like 20%. Much to my chagrin, it was up 20%. We recently sold Twitter for everyone because we've kind of given up on the the acquisition storyline there and felt like we were losing the true value proposition and we were waiting way too much on an event-driven investment. I'll spare you all the hours of conversation and research we did on that, but we felt like it was just time to get away. We sell it, stock pops 20% on yet again, more rumors, and now there's another rumor in terms of Verizon.
Yeah, so Salesforce.com was a big one on, was it Friday?
Friday.
We thought. But today, after the Yahoo account hack, Verizon's talking about this could possibly be a material adverse change, which would allow them to get out of the deal. And if that happened, Yahoo would have to pay Verizon $145 million. And then Verizon could use that to go and make another acquisition. And they're talking about Twitter as a way to kind of enhance their media empire.
So, focusing just on the Verizon Yahoo thing for a second, how could this not be a materially adverse change? I mean, we're talking about
Right.
500 million accounts
Right.
being compromised.
I think it would have to significantly affect the financials of the company, but it certainly seems if 500 million accounts are affected, there's a good chance that
There's going to be an impact.
be a big impact.
Yeah, I would think so. So there you have it, more speculation on Twitter, who might or might not make a play. Verizon's at least new, I feel like, the other day, you had Salesforce, which had kind of been on the back burner, I feel like, in some of these rumors, but then they were also talking about, Google might make a play. I've said, I think even on here, that I think Google would make good sense if they want to get into the social media realm. But it'd be a bigger acquisition than we normally see from Google or Alphabet as it is now. And it also was just kind of like, well, why now?
Right.
They could have done this when the stock's trading at 14, 15 bucks
Yeah.
and probably taken it out at 16, 17, 18, 20 bucks. Now, with the stock at 20, 21, 22, when we worked back of the napkin numbers, the number I kept coming back to based on recent acquisitions was it just seemed like this thing would have to go for something in the high 20s, 27, 28 was kind of where I got to. I think maybe 26.50 was like the lowest. And I still think that's the case for Twitter if there is a buyout, but I still don't really have a strong feeling that there is one coming.
Yeah.
At least not now.
I'm with you on that.
Yeah. Deutsche Bank and a little education.
Yeah, so Deutsche Bank getting hit pretty hard today, down about 80 cents, which is a lot for a $12 stock. The reason is German authorities saying that they won't come in to rescue the company, which I think is easy to say now.
Right.
But
No one wants to say we're
Right.
going to rescue this company.
Right. But what they've done in Europe in order to maintain coverage ratios is they've issued kind of a new financial instrument. So typically the corporate capital structure of an entity, it consists of debt and equity. So equity is what stockholders put in and debt is what a bondholder puts in. Deutsche Bank is a little bit different, and same with some of the other European banks. So if we look at this chart here, we have debt, which goes up to this white line, and equity. But let's say assets decline. So the first people who take the hit are the equity holders, the stockholders. But the problem is now your debt in relation to equity falls below a certain threshold that you need in order to keep the regulators happy with you and continue operating as a bank. So what they did, they introduced these contingent convertible bonds. So perpetual bonds, so they trade at about 9% yields. And what happens is these function as perpetual debt, so you get 9% on your money every single year, unless the capital ratio falls below a certain point, unless the equity to debt ratio falls below a certain level. So what happens is when this does happen, when equity does fall in proportion to debt, they will force the former debt holders to convert to equity. So this turns into equity, and all of a sudden they've got a big chunk of equity for that debt. So it helps to maintain the solvency of the institution, but the problem is the guys who hold the CoCos are getting converted into equity exactly when they don't want to be. It's like if you're skydiving and you go from a big parachute to a really small parachute right as you're approaching the the highest point of velocity. So that's not when you want to be converted into stock. So right now the COCOs are trading down about 3%, but with that move in the actual stock, I'm surprised that the COCOs aren't trading down further. So we'll see. We'll monitor those developments as they happen.
That's a great education point. If you go back and listen to some of the stuff we did during Bond Week, we talked a lot about debt versus equity. What's the use of each component? And we talked a lot about convertible bonds, but the contingent convertible bonds almost sounds attractive from an investor standpoint.
Yeah.
But then when you realize that the contingency is not a positive
Right.
one and you have no control over it, in all practicality, that's where it gets a little hairy. It's not like, hey, if this does well enough, you can switch up. It's no, if this thing goes bad enough, we're going to switch you up.
Exactly.
Whether you want it or not. So great illustration there. Debate. Big night tonight, the night we've all been waiting for, the night that's putting futures down about 0.5%. I'm excited. Trump, Hillary. I'm watching every second of it. You watching?
I'm watching, 90 minutes of the best debate.
It's going to be so much tomfoolery. It's going to be absolutely insane. Really interesting. You're continuing to see these polls close. 538 sends out an elections email. I highly recommend subscribing to it. They do a weekly 10 points on the election. It's like the same 10 points every time. And it's kind of interesting because you can track week by week, what's Hillary's worst nightmare right now, what's Trump's worst nightmare right now, that kind of thing. And I mean, reading through that thing, and this is basically a data-driven publication, reading through that thing, it's hard not to feel like Trump has everything to gain and Hillary has everything to lose heading into this, which is one of the more ridiculous things you can imagine, because how much have we heard from Trump already?
Yeah.
I mean, how can he possibly say something new that is also accurate? I don't know. I don't know how that happens. But it's going to be good television. I'm convinced of it. I'm watching, you're watching, intern Barrett's probably going to be watching. Tomorrow we're going to do a long-form audio podcast. It might just be me, but it's an open invite to everybody in the office to come get in here a little bit early. Let's chat about the debate. Let's have some lighthearted but informed discussion about it. So we'll get that out, just audio. So we're excited about it. We're also going to be tweeting about it. If you follow us on Twitter, @TuskMediaLLC. We're going to tweet about it. If we want to say something real opinionated, we'll probably say it on our own accounts. So we're not going to offend anybody on there. That's our sales pitch to you guys. No offense intended. That's kind of what we're going with. Football. I'm offended by your continued reign of success. Ben went 8-2 in picks against the spread this week. Absolutely dominant. He now has, I think you've picked 33 games correctly over the course of 4 weeks. The closest to you is at 25. Everybody else is hovering right at like 500, and you're just killing it. The interns actually have only picked 3 games right. In all seriousness, interns 3-1. That's strong.
That's pretty good.
On their locks of the week. So shout out to intern Barrett, intern Scotty for finally getting something right. But what'd you watch this weekend? I know you went up to New York for a last minute trip.
Yeah.
Did you get to watch any games?
Yeah, I watched a bit of the Washington game. I watched a bit of the first half, which was unfortunate. That was not the half to watch if you're a Washington fan. And then I watched a bit of the Georgia Ole Miss game. That whole game was.
Yeah, there wasn't a half to watch there. That was brutal. I watched a lot of football Saturday. I tweeted about this. It was the worst. It was definitely the worst. I mean, it's a short season day of football for me. Not just because of Georgia, of the year. Maybe the worst in a couple years, because it was like every team that won games I just hate. I don't like Florida or Tennessee. I honestly probably dislike Tennessee a little bit more, and they came charging back. Huge win. Didn't see that coming. I absolutely hate Auburn. Did you see the end of that game?
That was incredible. Barrett showed me
that was crazy, and now Les Miles has been fired. He's one of my favorite college football characters. All time, to lose Steve Spurrier and Les Miles in a 12-month period for me, as just a fan of college football, I don't know how I go on. I loved those guys. So to have Spurrier leave South Carolina in the middle of the year last year and get Les Miles canned this year, craziness.
Yeah.
I don't love it. But yeah, it was just one of those days where it was every team. It wasn't just my picks. I think I was 4-6. It wasn't a good week. Everybody struggled. You were the only one with a above 500 record this week, other than the interns. But it was just teams I just don't like winning games.
Yeah.
Super frustrated. Kentucky, can't stand that program. I really don't care about Kentucky one way or the other. But yeah, tough luck for me. Great luck for you.
Yeah.
Big weekend coming up with football.
Yeah.
So we're making a trip. You got a huge game Friday night for Washington.
Huge game, yeah.
It's going to be a big one. So we got that. Krebsbach's Wisconsin team has a huge game with Michigan.
Yeah.
We're all going over to Athens to watch Georgia play Tennessee, so a top 25 matchup. Should be a good time. And
we're going to make football great again for Andrew this week.
We're going to make football great again. We need to make football great again. Only you can do it, apparently, Ben. It's up to you. That's all we got. We're going to be back later today, probably with another podcast. Tomorrow morning, we'll probably just do the audio thing. We'll probably skip the morning. We'll get you another time on Tuesday. And then Wednesday morning, we're going to do the marathon. And you guys will have fun with it. Eventually, we'll probably move to marathons only, but we're going to kind of refine that process a little bit. Y'all have a great day. Thanks for being here. Hit subscribe, download, delete, re-download. Get these numbers up. Y'all have a great day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.